Hope everyone is doing great. So today we're going to be looking at the banks specifically in the US, and we'll look at Canada later on here. But the US banks have been in the news because they had their stress test with the Federal Reserve, and there's been all sorts of news coming out with that lately, especially today. A lot of them announced their capital plans. So there's four out of the six big banks are raising their dividend, but JP Morgan, as we can see here, is just keeping it flat. We're not going to raise. It's a really good company. You really can't, well, you can't go wrong, like quality wise, price wise. I think, in my opinion, it's going to go down some more just because we're going to be in a recession. And, obviously you could argue that it's priced in a recession, but I don't think it has yet. And we also may have a severe recession, which would really send the stock down a lot, especially if even if we just have a recession, it's just gonna go down. So yeah, but you really can't go wrong here. It's any of these six banks, and you get a nice little dividend as well. $1 a quarter, can't go wrong there. We'll look at Goldman Sachs here. They planned an increase to 50 a share. You can see they're up 0.82 in the after hours. Goldman is a really good company. I think they're actually trading. I can't remember what the book value is for it, but the book value is pretty attractive. It's got a look at the PE 5.84. That's crazy. It's got, a smallish yield, 2.66, somewhat smallish, but it's still a yield. I don't know. I like to have somewhat high yields these days, especially just because, the current environment and stuff. If it was a different environment, I would maybe, but reconsider, but I really like, high dividends. So we'll have a look at Bank of America. They raised their third quarter dividend to 22 cents a share. They're up 0.22% in after hours, so not a whole lot of movement. So that's interesting. As you can see, they have 2.6 yield here and the 9 PE. I like Bank of America. It's not one of my it's not one of my favorites out of the big six, but again, you really, really can't go wrong with any of these big six. It's kind of just pick your favorite, pick whatever, pick whatever you think is best and stuff. So we'll look at Wells Fargo as well. You can see here we're up 0.57 in after hours. They plan to increase their third quarter dividend to 30 cents a share, up from 25. So that's definitely a big increase, well, big-ish increase. Still only up 0.57% in after hours. So we'll see how these do. It'll be interesting to see when the market opens tomorrow morning what they do. So if we look here, you can have a look at the stats and stuff. Definitely come down quite a bit. We'll look at, what all these charts and have a little peek at them. It's definitely come down quite a bit. Pull up. We'll just look at all of these real quick here. A little peek. And then where were we? I think we were at Morgan Stanley here. They are up one of the big movers here. They're up 3.37 in after hours. And they have approved, because they approved $20 billion share buyback, and they increased their dividend to 0.775, up from 0.7. So that's good to see. Obviously, the shareholder people like it for sure. It's up 3.37 in after hours. It's interesting how a lot of these haven't moved that much, even though, there's been all the 4 out of 6 announced dividend increase. It's interesting to see. Obviously, we'll see how they do going forward, but it's interesting nonetheless. And then finally, we'll look at Citi. Warren Buffett still owns a stake in Citi. I can't remember how long ago he took a stake, but yeah. Um, I believe I think they just kept I couldn't tell you for sure, but I believe that they kept their dividend. I can't see any news here. I'm based up in Canada as well here. So, but still, you got that 5.64 PE with 4.27 yield. It looks pretty good. But obviously, City's had a little bit of trouble lately, but Warren Buffett picked it. So we're definitely worth noting. The Oracle of Omaha. So now we will have a look at Canada's banks. They are also NYSE listed, though. I will show all of them, and they are all NYSE listed. And if you're up in Canada, you just do td.to or you'll find them. But anyways, look at TD. They have an acquisition coming and in the US, but it's apparently going to be running into a little bit of trouble because, well, apparently Elizabeth Warren, the US senator, called them out and said that they should have their acquisition delayed or something like that because of their history of, well, they have a little bit of a tiny bit of a scandalous history. If you want, you can go look into it. I seen the article on, I believe it was BNN. Yeah, I'll just pull it up quickly here for everyone. Yep, you can see here. It was TD that had the most trouble, but BMO was well, because they don't have, I guess, such a scandalous history, I'll call it whatever. But they're not going to have that much trouble. I really like all these banks, especially the Canadian ones, because I know that, well, a few of them, like especially BMO, because they have a lot of growth coming, and I kind of like that. And they have all these, like, look at the dividends too. We have four, good high dividends as well. Payment days for those dividends are coming up as well. And they recently, because I think it was back in about, I can't remember how long ago, but a while, just some months ago, the Canadian government or whoever basically lifted the restrictions on the banks so that they could increase their dividends and do share buybacks. So ever since then, they've kind of had a bit of a flood. So, and they did recently somewhat just announce a bunch of dividend increases. A few of them did. It was somewhat like a 4 out of the 6 here, like, the US banks did. But anyways, can have a look at TAD there, and then we'll pull up a little bit of a year performance. It's come down a fair amount for sure. Obviously all the banks have. Interesting to see it peaked here, and that was, yeah, pretty much the all-time high for it right there. So look at RBC, another really good company really good company. You can't go wrong here. Nice 4% yield. RBC is, well, arguably one of the more popular banks up in Canada here anyways, at least in my area somewhat. But yeah, and you can see nice, well, they got relatively good low PEs and 4% dividends. Look at Bank of Nova Scotia. These guys I've been looking at a lot recently, for one, because of this yield. They have, solid PE. They've come down a lot, obviously. I really like that they're looking into expansion into the Caribbean. Pretty much all of everyone else in Canada is kind of just focusing on the States, but these guys are like in the Caribbean and South America. So it's interesting. It's something different. I'm always have a bit of trouble investing anywhere else besides Canada, the US, or Europe, very stable as can be countries, because, like, for example, I really don't like Chinese stocks because you have a Chinese government, and in my mind, that is just something that's way too unpredictable. Like, I even, like, for example, I'll just pull up, I was going to show you guys, but Manulife here, they have a lot of business in China, and I don't know, I'm hesitant to own them. I really don't like having China exposure because it's such a wild card. You really don't know what is going to happen there. They had all these lockdowns and stuff, and it's such a wild card. And well, other issues as well, in China, that I call it moral issues, I guess. I won't get into it, but that's kind of just why I don't like China. But it's honestly just, it's such a wild card. And it's nothing, it's just the Chinese government specifically. Nothing. I love Chinese people. It's just the Chinese government. It's, But anyways, going back here, we'll look at, I hope the Chinese government doesn't hear that, but but anyways, we'll look at no Bank of Nova Scotia. It's got that nice 5% dividend. It's one of the higher ones among the banks here. I really like it. I've been looking at it lately. I think it's going to come down some more. So once it does, I think I'll maybe buy into it. I've been really thinking about it, but we'll see here. Obviously, like I said at the beginning, it's all about recession, basically. Even with rising interest rates, it doesn't, it matters, but it really doesn't, because the market's just going to say otherwise and just send the banks tumbling if there is a recession, and especially if it's a bad one. We're going to be hurt because everyone's still kind of scarred from 2008, and understandably so. But that is why you see such things like the stress test and the U.S. Federal Reserve somewhat controlling the capital plans, and you see all the U.S. banks very, 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 very careful. They're more resilient than ever, and prepared for a 2008 crisis. So we'll look at BMO here. They were the other company that had an acquisition going. We can look at just quickly here what they were called. TD had First Horizon, and then BMO had Bank of the West, as you can see here, for 16.3 billion. It was announced a while ago. I remember it when it came out and stuff. So yeah, nice 4.4% dividend, very good PE. It's a really good stock. I've been looking at BMO and then Bank of Nova Scotia to add. That's who I've been somewhat really interested in, just because I like, I spoke about Scotiabank, but I like BMO and their acquisition here, and they're really focused on growth somewhat, and I don't know, I like BMO, so I like Brian Belsky too, for those who know him, even though he's been somewhat pretty wrong this year. I think he still has like a 4,800 S&P target actually for the year end. So that's interesting. Here we can see little known one is Canadian Imperial Bank Commerce, nice 4% dividend, 9 PE, just another solid company. Can't really go wrong at all here. It's come down a lot, which is just the recession fears, arguably pricing in a recession. But I think, again, we have longer to go and stuff. So, and then here we have talked about it earlier, but Manulife, look at this dividend. It's very nice. It's an insurance company, really can't go wrong here. Just, for me, it's China. I sold out of it like a while ago, like somewhat maybe before the China lockdowns, but I can't quite remember. But I sold it basically because of the China lockdowns. I wanted to get out, so I sold out of it, and I haven't bought back into it since. But I used to be a shareholder a while ago, but since all this China stuff kind of happened, especially I guess call it Taiwan, the potential for that and stuff, I really don't like that. So I just I haven't touched it for since, but I might get into it. I'm really hesitant to own anything in China, and I really like even just like any other countries that aren't very, very, very stable, like Canada, the US, and Europe, call it, I guess, or whatever, but anyways, so that's a quick little video about the financials and the banks. I hope everyone enjoyed, and I hope everyone's doing great.